Construction spending and higher prices powered a strong third quarter for Caterpillar, allowing the company to beat analyst expectations for earnings despite fears of a global economic slowdown. But a tepid fourth quarter forecast indicates that the momentum may not continue. The machinery giant says it expects revenue to be, quote, slightly higher on a yearly basis, disappointing analysts who expect a 5% bump over the next 3 months. We can already see softness in construction spending, construction beginning to creep in for some international segments in the company's third quarter results. For a deeper dive into this report, let's bring in Michael Shlisky, D.A. Davidson's Managing Director of Equity Research. Michael, thanks very much for joining us this morning. So let's jump right into Caterpillar's results. They released them this morning. You saw an instant negative reaction in terms of the share price. What was your initial reaction to its results?
I think an initial cautious reaction makes a lot of sense. Backlogs were down roughly 8.5% over the prior quarter. And it sounded like some dealerships looking to decrease some of their inventories, especially on some larger equipment like excavators. Those are some real challenges to numbers, at least for the fourth quarter, despite some comments that most end markets do remain strong and they do look for a pretty strong 2024.
Michael, there was one thing that really caught my attention here during the quarter and kind of wrote it down, especially on the regional basis here, where LATAM, that was down by about 31%. You looked at China as well, all in on the on some of the business there was down by about 8%. When you think about ultimately how those delivery metrics and not just kind of delivery as we would think about with some other auto manufacturers, but specifically in how their dealers are working through inventory, it's a different dynamic here. So kind of make sense of this for us. Where are they prioritizing growth for this company?
Well, in the construction business, which is where I think you're referring to, North America is still the main driver of that by a very wide margin. And in North America, in construction, retail sales were up about 20%. In mining, they were up about 49%. So luckily, yes, they are seeing some decline in China, which is still 5-10% of sales overall. LATAM has been growing in previous years, but it is kind of rolling over or at least lapping. But luckily, the North American business is actually doing quite well right now.
Michael, when you think about the direction of Caterpillar through the balance of the year and into 2024, is there the expectation, like, would you be looking for more, say, efficiency or cost-cutting action that you expect to see for the company?
Yeah, so Caterpillar is always looking to cut costs. They always have every quarter a restructuring charge, they call it, which is ways to make their business more efficient. It doesn't sound like we're in an environment for 2024 where we're going to see most of their businesses completely roll over and decline substantially. I doubt they're looking to make some major cuts there, either to production facilities or to people. There's always efficiencies. It just does not seem like we're at that kind of a decline right now.
Michael, you currently remain neutral on the stock. You've got a price target of $294. What would you need to hear from this company's leadership over the coming quarters to change that positioning, to kind of be more convicted one way or the other?
Yeah, it really does come down to order activity, particularly in some of the larger areas. So one area that I would want to make sure that we're confident on would be mega projects, things like large EV plants, large battery plants, large oil and gas installations that have been driving their business and their outlook for the last couple of years. Given some of the shakings we've seen around EV sales, given some of the areas we've seen about auto strikes being resolved with EVs and the crosshairs there, I'd love to see some of those larger projects remain on track. So, I mean, I do think so far so good, but as those new labor agreements kind of come into play at the big three, let's just make sure that their large EV projects are still going to happen in the next couple of years here. That will be one area that we'll be looking at.
I mean, in some of the CHIPS legislation that's moved forward here just over the course of this year, you've got somewhere north, or at least in the ballpark, of $50 billion that's been earmarked for bringing on more capacity for chips, more factories to produce these chips and fabricate them. Do you believe that Caterpillar is a winner in the chip production space, or at least from the amount of chip production that is set to come forward here, simply because of the amount of factories that are going to need to come online?
Yes, those particular projects look very strong for the next couple of years. I'd also add on to that data centers with the growth in AI that we're seeing across the economy. A lot of their power gen products and a lot of their other products help to power those projects too. So certainly those are areas of growth for them for sure.
Michael, what did you like in the latest quarter from Caterpillar?
So besides the fact that some of their major end markets like construction in the U.S. were up, they also increased their free cash guidance for 2023. They were expecting to be at the high end of the $4 to $8 billion of free cash as of last quarter. This quarter, they actually expect to beat the high end of that $8 billion number. That's a really strong number. They do expect to have, again, a strong 2024. There probably is some working capital liquidation happening here, but it sounds like they can probably sustain it or at least be very high into next year there.
Michael Shlisky, who is the D.A. Davidson Managing Director of Equity Research. Michael, great to have you here and get some of the analysis here on Caterpillar this morning. Thank you.
Thank you.